Hi, good evening. Today is August 3rd. S&P 500 closed up around 30 points since yesterday's close after being down on the open. The low today tested the low of the previous week within 1 point. And then we went all the way up almost to all-time highs and turned a little bit 5 points from all-time highs. And yesterday, S&P 500 was kind of very similar in the range. It came within 2 points from all-time highs and also sold off. So basically, we're still trading within the range of the last week, and nothing exciting has happened. But like I was expecting Friday, I still think that this weekly range will break. And so far, it's likely to break to the upside and test the Soja level 44.50. And the Vol trigger level is in the middle of the range at 43.85. So as long as we close and keep closing above it, it's still more or less bullish. But of course, if we break the low of the last week, we probably will trade to 43.50 at least. But I don't expect any major breakouts, just kind of more of an expanded range. You know, there's one thing that was interesting today, that the Cuomo report came out and paints a picture of a serial and criminal sexual harasser, as Washington Post puts it. The report is accusing Cuomo of violating state and federal law with a pattern of sexual harassment, unwanted and intimate touching, and a vindictive and abusive work environment. Apparently, 11 women came out, but he still hasn't resigned yet. But I'm sure it's not far out, and he is likely gone, because at this point, Pelosi, Schumer, de Blasio, a whole bunch of Democrats, and now the last one, Biden, all came out and called on Cuomo to resign, as they have announced the new criminal investigation. Of course, Cuomo denies everything. He says, "I never touched anyone inappropriately. I am 63 years old." I didn't know there was like a time limit on when it becomes inappropriate or something, but you know, he's a character for sure. And so instead of, I don't think he has a choice, but he's likely to resign. It's just the matter of pressure building, and you know, with the whole Democratic Party against him.
Every Democrat in the
Right.
New York congressional delegation has asked him to step down, and not all of them are really, lefty. I mean, some of them are fairly moderate, like from upstate and so on. So, yeah, he's feels some pressure, I think. Tish James she was the public advocate in New York City before taking that role, and she's pretty left, I would say, but her language was not did not hold back at all on that issue. So it's interesting to see. I think I don't know who would be I guess it's the lieutenant governor that would step into his shoes if he would be forced to step down, right? So I'm not. I can't say I even know who that is.
Me neither. But you know, one concern is that, as Victor would say, this is probably not really woke news to lose a significant Democrat. But so I'm not sure if the market would care if he resigns. But that's one of the things. And another notable thing was that Clorox CLX was down almost slightly over or under 10% today, as margins have contracted hugely. And this was caused by inflation in manufacturing and logistic costs. They also have lowered the guidance for the full year because they believe that the inflation is not transitory and they're sticky. They expect that the margins are not going to improve much. So that's just one example of margins pressure on the companies, and you know, I'm sure they're not the only one, so there will be a little more coming up. At the same time, Delta virus is still kind of in the air. Even though US has hit 70% vaccination rate, but as our good doctor says that I'd love to see 90%. So our Dr. Fauci is never satisfied, keeps moving his goalposts, and so now he said that in order to get 93 million unvaccinated people, we're going to need local mandates. And local governments have listened. And so now New York City will require proof of vaccination for all indoor activities, indoor dining, gyms, etc. So I don't think this is good for New York economy because lots of young people, as we know, are not vaccinated and they don't want to take the chance with the vaccine. So I expect young people to be moving out of New York, at least, and some of them. So
I think it's going to be just a disaster for New York, and to be honest, and
yeah,
the economy is really precarious right now, and I don't mean like the Wall Street and so on. I mean a lot of those institutions have already moved out of the city anyway. They're in New Jersey, Jersey City, or something, or but yeah, it will kill a lot of the restaurants and so on because people aren't going to change just because of the mandate.
right. And people were planning to come back into the office eventually, and so at least help out the restaurant for lunch, etc. after hours dining. But now with the mandatory vaccination and the virus spiking, people will probably continue working remotely, thus killing the business even further in New York. Plus, they can't really find workers to begin with in New York City. And now with mandatory vaccination, it's going to be even more difficult. But, I guess de Blasio and Cuomo know what they're doing. Cuomo already killed pretty much what his second highest per capita death, or first or second from COVID anyway. So, and another interesting thing today was Robinhood move. So Robinhood today moved up 24% as it released some report which said that the revenue dropped, but the stock is gamma squeezed higher, and now it's up 24% in one day, way above the opening range. So I wouldn't be surprised for it to go to even high on that squeeze.
Oh, yeah.
As we all know, it's not the valuations that move the market, but the options trading. And well, that's it for me for the markets. And as it wasn't really an eventful couple of days, just trading in the range. But in the crypto, it was a little more exciting as there is a lot of more reports coming from chairman of SEC, Gensler, who is saying that SEC is assuming authority pretty much over the whole thing crypto. He's saying that stable coins will be subject to laws governing securities and investment companies, which I think is a big deal. And the crypto trading platforms will require compliance with security laws as well. And he's saying that this is going to be his top priority, the crypto trading, crypto lending, decentralized finance platforms. He's going to be looking at it all, and this is his highest priority right now, and especially the stable tokens. And
how do you regulate a decentralized trading platform? There's not a CEO, there's not a CTO, there's not a compliance officer, there's no officer. It's run by the community. Who do you go to? What it will end up doing is it will make the United States a backwater, because I mean there are enough people like me who, I mean, if they really made it illegal, I'd leave the freaking country. Why would I stay here? A big chunk of my net worth is in this. I'd leave the country. I mean, why would I stay? What's in it for me? Even like even Russia would be a freer country than the United States when it comes to something like crypto, because they're not, although they make, these, I think it's a little bit of, like Gensler's already also said he's perceived as being more crypto friendly than other people, but he's also said that, say, Bitcoin, and that there are some cryptos that are clearly unregistered securities. And well, the one that the SEC has gone after for that is Ripple, and like XRP has been taken off of Coinbase and so on because of that. They don't want to carry securities, but many of the others are truly decentralized. They're not being issued by a company. There's a Ripple corporation with a CEO and so on, unlike, say, Ethereum or Bitcoin, where there's There's no board, there's no leadership team. It's being run by the community. So
right, but they, for example, all of the stable coins, right? If it's to be used on an exchange that is in the United States, like if the Coinbase is to exchange stable coins, they could mandate that all of those stable coins be regulated as banks or financial institutions with all of the reporting, et cetera, et cetera.
well, there are already stable coins that are audited and they're reporting, and they are considered banks in the state of New York and
right, but some others are not, and so I'm not
Right.
sure if they independently audited or.
It'll just push a lot of there's already a lot of platforms that they won't take US residents, and it'll just push more into that category, and they just won't want to deal with it, and it'll make the United States, like I said, a backwater, and it'll be like like if you imagine if you were a country that banned automobiles and you went and banned any internal combustion engines, and you were going to that country in 2020, and there's still horses and buggies and oxen to help plow and things like that and harvest crops. I mean, you'd say, well, that's a backward country. They ban technology because it spooks them or something. And that's what they want the United States to be. Some of these people, they don't trust technology. And they're the same people who want to mandate vaccines on people, ironically, that you're supposed to trust the science there, but you can't trust, innovation over here. So it's a very it's a philosophy of control rather than a philosophy of freedom, and that's what it comes down to. They're not really against technology. They're just, if technology doesn't help them increase their control, then they're against it. If it helps people be free, then they're against it. They're against the iPhone security because it doesn't allow a phone to be cracked as easily as an Android phone. And so anything that gives the slightest edge of freedom, they want to ban. And that's what it comes down to.
Yeah.
But a lot of the stable coins there are truly decentralized stable coins that even if they wanted to regulate them, there's nobody to regulate. I mean, who are they going to send their letter to? Who are they going to send a subpoena to?
No, I'm saying the only way to regulate it is via the banking with financial U.S. institutions for withdrawal,
but if you've got more money outside of the banking system than you do inside the banking system, well, okay, so I can't send money from the bank. Well, I've been sending money from crypto to my bank. Now I just have to figure out how to pay for stuff only in crypto, and I even use a bank. So that's what a lot of the people that have crypto assets that they're thinking of is, well, how do I manage this how do I manage this it might land a little better than people think. I think that Gensler is probably having to speak negatively in order to force compliance among certain players, but who knows what will actually come out of it. Right. I think that a lot of what might happen is that there will be an attempt to regulate that'll go overboard, and then it'll get reversed as soon as there's a change in the Congress or whatever. It would change pretty rapidly under if the Congress were to flip, for example, because there's I'm not saying that Republicans are pro crypto. They're not necessarily. There's as many backward thinking people there as are in the Democratic Party, but it's slightly more favorable. And some of the people that are viewed as being political advocates they tend to be in the Republican Party or tend to be more on the right. And someone like Caitlin Long from Wyoming, for example, she's the digital assets lead for Wyoming. They actually have this role in their government that's a cabinet level role because they want the companies to be founded there and so on. And they've thought about even making Bitcoin or other crypto legal tender in Wyoming. So I could see that if there is this sort of pressure, there would be and at the state level, there would be moves to do things like that, and that would increase. And as far as the federal courts, well, it depends on how they would land on something like that. But I don't think they can really stop it because the banking charters, there are federal banking charters, but there are also state banking charters. And so a state can issue banking charters, or insurance charters or these other financial charters at their own discretion without without the federal government.
The way I see this deregulated finance, DeFi, decentralized finance, it's a direct competitor to US banking system, right?
Of course.
And I would not underestimate US banking system. Why would they're one of the largest contributors to both parties, Republicans and Democrats. So they're not just gonna let DeFi take over and let them do the loaning and the leveraging and everything when
I agree completely that both the parties are largely in their pocket. But on the other hand, look at over the last 3-4 years, the rise of, and I don't want to necessarily go into woke or what any of that sort of thing because that we'd have to define that and so on. But I would just say that a lot of companies have decided to take a political stance on things like Delta taking a political stance on voting laws in Georgia, for example, where they're based. And so most of my life, at least, and before that, not to mention before, I mean, companies would be very, they didn't want to get involved in politics. They would just be, whoever you want to vote for, vote, we're not getting involved. We don't have an opinion on something that doesn't directly affect our business, right? Like Delta, sure, I could understand them taking a position on airline deregulation or taxes or something like that, but on voting issues, I mean, that's just so I think where I'm going with that is I think that a lot of that has been activity where people call it like virtue signaling or whatever. That tends to be leftish, let's say, not necessarily strong left wing, but left-ish. And so what a lot of people I think on the right have come to think is, well, these corporations, we might have been more corporate friendly, but they haven't been more friendly to us, and they're not returning that loyalty. So maybe we shouldn't be corporate friendly anymore, and view these corporations as being not our allies. And so it includes the banks, by the way. So I although there may be still, there's certainly some people that are the Republican Party may be more corporate friendly. I think that's changing, and I think that some of the newer leadership is much more skeptical of corporate power than maybe previous generations of Republicans, is how I would put it. And I think especially among Generation Z, there's a very strong skepticism of corporate power. And that is the same thing that drives adoption of crypto. It's the same underlying belief that these like the Goldman Sachs or these these banks, they just banking system, they tilt things in favor of their cronies, whereas crypto can be fair. You can build your own currency from the ground up and have it fairly distributed, unlike Goldman Sachs stock was distributed. I mean, who did it go to? Top leadership. And
But I mean, Bitcoin is not really fairly distributed. What are the numbers? Like 10% own 90% or 20% own 80% of Bitcoin. So it's not exactly.
Bitcoin, no, but you can, but that's a point. You can develop your own project and have it distributed. Like for example, Uniswap is a good example of what I'm talking about.
Mm-hmm.
Where, although yes, sure, there are investors in Uniswap and some big VC firms that own a very large chunk of this. However, when they launched their token, the Uni token, they distributed to the people that were using the platform, the liquidity providers. In other words, if you were a market maker, then, and it didn't matter how much or little. I mean, if you were doing a lot of market making, then you got more. But there was a minimum amount that everyone got. Everyone that had done any LP activity prior to September of 2020 got at least 400 Uni tokens, which at the time that launched was about $1,600, and now it's over $8,000.
Yeah.
And so how many companies just give out a share of the company to their customers? So you may say, well, it's still owned, 80% is controlled by 20%. Oh, that's true. However, Goldman Sachs didn't give money, give stock to their clients unless they were also, somehow involved in a very deep way with the company. Where else are there those launch models? The fair launch model is something that's really an experiment that's been done primarily in crypto, and it's unheard of elsewhere. How else would you distribute it, the company, to your customers as easily? So Uniswap was an example, but then like Yearn was another example where people that were using it. I mean, this at the time, now it's trading at 31,700 per token. There's only 36,000 of these tokens outstanding or in existence. But that said, when this launched in 2020, the people that got in early, some of them, were college students in Malaysia. I mean, there were two guys one guy that was a college student in Malaysia who got, just by being yield farming this and depositing money basically on the platform, he got thousands of these tokens. In other words, now has close to $100 million in these tokens. And he was a college student in Malaysia, like 20 years old, and he put maybe $10,000, $15,000 in on their platform. But he was very early, and he's one of the key people now running this because of his ownership. But there's other cases like that where, and this is not just like, this was a very well-designed platform. And so it's just, where are these launch models happening in the equity market? They're not.
Well, IPOs is not the same thing. I mean, Microsoft, well, obviously decades ago, pretty much lots of people got turned into millionaires when they owned the Microsoft stock, or
they owned it, but they had to buy it. And yeah, I know I one of my high school science teachers who was one of my early mentors in my life, back in the early 1980s, late 70s, early 80s, he bought a ton of Apple stock. And he held it until his death, and his family still owns it. And I don't even know how much it is, but it's, and at least, even though he sold some over the years, tens of millions of dollars, and he maybe
Right.
put like a few $1,000s into it back in the 70s or early 80s. And so, yeah, that certainly happened. But this is all a much more rapid process where like this urn went from being just a website in early 2020, like January, as a website has just been kind of cobbled together by someone to help his friends and invest better in crypto and decentralized finance. And it got rehashed, rebuilt in like April of 2020. And went from this very basic website in April 2020. They issued a token at that time, and it created millionaires in just a matter of months from nothing.
No, I get Microsoft, Apple, they produce goods. I mean, take any company on the US stock market outside of Lyft and Uber who lose money every year and still valued a lot. But let's just take the profit-making companies like Microsoft or Apple. So they make things and they pay shareholders and the stock goes up because they actually make money. But what do all of these companies produce? They have revenues, but they don't produce anything. It seems like the revenue is from some sort of recycling the tokens around without actually producing any tangible assets.
That's not true. Well, that's not true. So what does a bank do? What does a bank produce? You invest in a
like
bank.
I said, they're like banks in a way, but unregulated banks. So
Well, it's a question of what it is. Okay, but what does a bank do? A bank is involved in, they lend money out to people, right? And then they also borrow and from people. So people deposit, they're borrowing from those people, and then they lend out to people, and the bank makes money on the margin between those two, right? That's where they get all their revenue, is the margin between borrowing and lending. Right. And okay, but it's also true for a website like Yearn, where they are so they do, several different things. They do lend money. They do lend money to people, but it's all collateralized lending. So there's very little risk, unlike with a bank where it's the collateral is a mortgage on the house, right? They have a claim, a lien on the house, right?
Well, but isn't the collateral in this lending will be Bitcoins and Ethereum and other tokens?
Possibly, but it was over collateralized. So if it falls in value too much, then you have to put up more collateral or you lose the assets. And so it's over collateralized, way over collateralized, like 600, 1,000% over collateralized percent, so that you have to put down 6 times as much as you're borrowing.
Okay.
And so it's over collateralized lending. But then they're also, what they're doing is it's a yield aggregator. So what that means is there are websites that are doing different things, or apps that are doing different things in crypto. And one of them, for example, is, let's say that you want to earn a yield on Ethereum. Well, how would you do that? You can lend it out, like a website that's a centralized app, like BlockFi or Celsius. They allow people to deposit crypto, like Ethereum, say, and then they pay interest on it, and they pay something like 4 or 5% interest on Bitcoin or Ethereum. Well, how do they do that? Well, they disclose that. They say, we lend it out to people that want to engage in short selling. So they lend it out to hedge funds or money managers that want to short. And they charge whatever, 7%, 8% on that. And then they pay their depositors 4 or 5%. So they're making money on those margins, right? But with decentralized finance, it works differently, a little bit differently. There's not direct lending to a hedge fund or something, even though they could borrow at different places. But what it is there's a set of like liquidity pools, for example. And to give an example, at Yearn, you can get interest on Ethereum by depositing what's called staked Ethereum into a liquidity pool and then depositing in a Yearn vault. And so what you do is you would have, it's a liquidity pool that allows a trading between Ethereum and Ethereum that's staked for Ethereum 2, which is supposed to launch, let's say, early next year. And the firm that is one of the big staking firms is called Lido, and they are one of the more reputable staking firms in the space. And so in order to encourage people to keep their assets on their platform, they will issue their token, and you're getting a stake in the governance of that, of Lido itself. And so the more you've got on deposit there, the more you're earning in that token. Well, you could turn around and sell that token, or you could hold on to it as a voting share in the company itself. And their idea, just like Yearn, like the original founder of it, a guy by the name of Adrian Konya, he did not keep a single Yearn token. Even though he created this, he is very, he's very like against the idea of like growing rich at the expense of his customers and so on. He's got just a very different mindset than a lot of people in the space. But so what Yearn will do is you can deposit money, Ethereum, into the staking contract for Lido, then deposit it into a liquidity pool that allows that you're profiting a little bit from the trading of Ethereum against staked Ethereum, and then deposit that liquidity pool into Yearn. And what they will do is they'll take the Lido tokens that liquidity pool, or that the staked Ethereum is earning, and they'll cash it in automatically for you and give you more Ethereum. And so you're earning interest on and it's called yield farming, that process where it's being turned, or yield aggregation, where they're taking everything that you're earning as subsidiary income from depositing on these different platforms, and they're turning it back into the base asset that you originally deposited. And so what it's doing is it's turning, you're earning equity in these different small amounts of equity in these different platforms, and it's turning that equity into into savings for you, basically. And now some people may choose that they'd rather have the equity. If it's a good company, really well run platform or app, then the value of that token might go up quite a bit over time. It might not. So, many people prefer to cash in and use a yield aggregation platform like Yearn or some others that they and so Yearn they'll charge a management fee for doing this for you. Some people would choose to do it on their own, and they don't have to pay that management fee, and they get more income, a higher yield. I choose to do it on my own because the difference can be something like, it can be several percent APY. But again, it's a question of convenience versus and with the transaction fees and all of these things that affect it. But they're adding value in the same way that a bank is. If you didn't lend money to a bank by depositing in a bank, then you could go on a website like Prosper or Lending Club, and you can lend the money peer-to-peer yourself. But then there will be a certain percent of people won't pay, and you have to engage in collection or something like that. And it's there's a cost, there's a risk associated with it, and there might be some costs associated with the higher yield that you get from doing that. You might be able to get 6% reliably from like a lending club versus whatever 1% in a bank if it's a really high yielding account in a bank. But you don't have to worry about all the collection and managing the loans, portfolio of loans and so on. If you would just deposit in a bank, handle that for you. And you're very unlikely to lose your principal. And then there's FDIC protection. You get your, if the bank fails, you get up to a certain amount back. None of that exists in crypto, obviously. There's no FDIC. There is FDIC protection at, say, Coinbase, but that's not decentralized finance. That's a centralized broker-like platform where you have those protections. But there's you get a higher yield because of the risk. There's market risk from the equity price, the prices of the individual tokens that are fluctuating. There's contract risk. There's there's many other risks, and the higher yield is compensation for that risk.
Right. Yeah, that makes sense.
But it's some of these platforms, in my view, it's like just like IPOs in the .com days, where there were companies that IPO'd, like Amazon, I think IPO'd in '96, and there were many people who doubted, well, selling books online, I mean, what's that all about? How is that a good business? And then when they got into, I think they next moved into music or something like that, like, well, now they're getting outside of their
right. But I mean, when people are saying that, look at Amazon, you should just buy and hold. Amazon is just one company out of 100, and 99 went bankrupt. And Amazon itself went 80% down, or around 80% down, at least twice in its history. So it's not so easy to buy and hold. And there's plenty of companies, like, who went bankrupt in 2000 bubble. So,
but there were for as many Amazons as for every one Amazon, there were 10 hot jobs, or pets.com, and so on, that they went bankrupt. They went out of business eventually because they could. Lycos, is another example where people, the sophisticated people, market analysts, people like Mary Meeker or whatever. I mean, I'm just trying to recall these names a little bit. They were saying Lycos is Netscape may be good, but Lycos is the future, of browsers. And I mean, it's no one had even heard of Google, didn't even exist at that time. But at the time, the hottest browser, the one that the real sophisticated used, was Alta Vista, which was run by Digital Equipment Corporation. So, I mean, none of these names even, nobody's even heard of them anymore that haven't been around the internet from its early days. So I think that a similar process will happen with crypto, where many of these, the decentralized model is I think it's here to stay, but it won't work equally well for every type of app, every type of company, every platform. There will be some that they survive and thrive, and then others that will just go by the wayside. And there will be, as more money flows into crypto, bigger and bigger players will say, okay, now let's execute our crypto strategy, and it'll be, Goldman Sachs will have their own thing, and so will others, and there will be people that are perfectly happy to use these centralized facilities for their assets. There will be others that still want to use a true decentralized type platform, but I think it's just there will be a handful of companies like that'll be the equivalent of Amazon down the line. And then the platforms are a totally different thing, which I don't think there's any real, like a platform like Yearn, there's an analog to certain apps or certain companies that existed in the .com era. Yearn or Synthetics or Uniswap. I mean, these all are companies. They're essentially companies, but they're really applications that are customer facing. Whereas something like Ethereum or Bitcoin, these are platforms. And so there's no real analog with a .com type. Maybe the closest analog would be something like Facebook, where the value of Facebook is driven by the number of people that use it. The network of people that use it creates the value of the company itself. If the number of people that use Facebook fell by, let's say, 90% over the next year for some reason, there was some better thing that came along, well, the value of all of their assets, I mean, their assets are not the servers and the programmers and all that. It's really the network of customers that are using it. And that's why Bitcoin and Ethereum and the top platform tokens or coins are inherently more valuable than the ones that are, they may be a great technology, a great idea, but they don't have the user base and the programmer base and the miners and so on. And so they can't, there's no value case for them. But that's the, I think the key is a totally different kind of valuation model. I'm not saying this time is different or whatever. It's just there's the type of valuation model for like an Ethereum or Bitcoin has to be it's similar to what VCs use for something like Facebook, where no one had heard of this type of application before. It didn't exist, but it was based on what the value of the network was, and there are certain laws in telecommunication, like called Metcalfe's law. There's some others that are used to value the size of a network, and people like Peter Thiel famously used that, and deciding to invest in Facebook. Well, that's the same type of motivation for investing in something like Ethereum or Bitcoin.
And just to switch the topic briefly, the Moderna stock was up today 11.5%.
Well, Pfizer was up big today too. Pfizer was up really nicely today. I'm not sure that the vaccine mandates were the driver of that, but it was just across the board. So Novavax was up a good 3%. So this one hasn't launched yet. It will, but it hasn't. But Moderna had a huge rally even from December, when after it rallied quite a bit off its low, and then Pfizer, 4% today. So all the vaccine stocks, it may have been some of these mandates, but I think it's just what's the sense that the disease itself is that there's been this increase in the Delta variant cases and so on, and that may be driving more people to get vaccinated, but would be my hypothesis.
Yeah, now some countries are talking about the second dose, I mean, the booster shot rather. And so it seems like a never-ending chain. So yeah. Yeah,
It's I think that there's going to be an upper limit to the vaccination rate in the United States. I don't know what that number is, but it's not 90%. It's a lot lower than 90%. That's upper limit. And I think that in some countries like France, they may mandate it and get a higher vaccination rate. In Israel, they more or less mandated it and got a fairly good vaccination rate, but they haven't seen a decline in the cases of the Delta variant. So that's the Pfizer data just came out, or they just released some of their data. There was the final release of data from their clinical trial. So 6 months after the trial ended, and they tracked and monitored the patients. And what the data showed is that the total patient population in the trials was 30,000. So 15,000 in each arm of the trial, placebo versus vaccination. Mm-hmm. And so in each, I think in the vaccinated arm, there were 14 deaths. In the placebo arm, there were 15 deaths. So essentially the same. I mean, out of 15,000 each, that's effectively the same statistically. So in other words, the death rate, now the rate of people getting the disease, getting infected, was higher among the placebo arm. Well, the death rate was the same basically, and there is no difference in the death rate. And so the Pfizer data itself contradicts what the health authorities are saying, which is that if you get it, then the chances of death or more severe symptoms are far reduced. Well, that's not entirely clear. What seems to be the case is that your chance of getting it is reduced if you take the vaccine, but even the chance of death or severe symptoms is not necessarily any better if you actually get it. So that's but I think that not getting it at all is if you're immune compromised or you have COPD or some other condition, diabetes, that would really put you at risk, then clearly it makes sense to get vaccinated. It's just whether healthy people or children or whatever should be, that's a different matter. But I think the rise in cases is maybe driving some of this, the sense and where this was bottoming out in March, whether it was Pfizer or some of these other, it's pretty similar charts across the board, that it was a sense that, well, this is like going away. And then as the Delta variant has spread, and then it appears to have a higher reproduction rate than the earlier variants, that might be the driver here. Thanks very much, everyone.
Thank you. Have a good night. See you all Friday.